Although I still think we're in a structural upshift in gold. So, this feels like a bull market, but I think it's going to keep getting better.
Politics makes men dangerous, but trade makes them wise. This is what I believe. And that's why when media pundits and political leaders are constantly spitting out headlines, trying to make sense of our global conflicts, I want to talk to the entrepreneurs who have boots on the ground, operational experience all over the globe. My guest today is an entrepreneur who fits that bill. His business is truly multinational with operations all over the planet. 8 months ago, while visiting one of his operations, a military coup erupted only 8 blocks from his hotel, and he found himself planted right in the middle of a war zone. Now, he is a tough and durable and very smart entrepreneur. He and his co-founder launched Sandstorm Gold Royalties during the depths of the 2008 financial crisis, and today they have over 240 royalty agreements and produce nearly 200 million in annual revenue with sites on $250 million. A fascinating business model and a very intelligent entrepreneur with an amazing global perspective. I thoroughly enjoyed this interview and I know that you're going to love it. Here is Nolan Watson, the CEO of Sandstorm Gold Royalties. Enjoy. Nolan, it's great to have you here. Thanks for joining me.
Yeah, thanks for having me.
Okay, there's a ton of stuff I want to talk to you about today. I want to talk about the gold market. Obviously, I want to talk about Sandstorm Gold Royalties, a company that you and your business partner co-founded during the depths of the 2008 financial crisis. Today, a company that has over 100 royalty agreements, 40 of which are presently cash flowing. And the growth and upside that is already built into your business model today is super, super exciting, by the way. So I want to talk about that with you. You also sit on the board of the World Gold Council.
I do.
So maybe let's start there. I want to get your thoughts on some of the action in the gold sector right now, because a couple things are happening, right? During the last 2 years, 2022, 2023, we saw record central bank gold buying to the tune of like over 1,000 tons per year. Record at least in the last 40, 50 years. But gold investors were saying, okay, but why isn't the gold price responding? And maybe now it's beginning to. And I wouldn't make the assumption that those two things are directly correlated, because when something happens in the market, we always then go and try to apply logic to it. But what's your take? Are those two things related? What's your take on the price action in the gold sector right now? Let's start there.
Yeah, I think one of the most interesting things I get to do in life is be on the board of the World Gold Council. It's fascinating, and I think most people don't realize, but the World Gold Council, we actually started up the world's first gold ETFs, and we own more than 50% of the money in gold ETFs around the world. And so the World Gold Council is actually funded by the fees of the world's gold ETFs. And so the World Gold Council makes a lot of money, and it has the ability to use that money and redirect it for reshaping how gold should be used around the world. We get all the data. One of the things that's been happening from a macro perspective over the last little while is in the gold ETFs that we own, you can actually see every month after month, gold is being sold out of ETFs. There's been this sort of net liquidation of gold for the last couple of years as interest rates have gone up and it's become more expensive to hold gold. You've seen institutional investors in the US, which are predominantly who owns the gold ETFs or high net worth in the US, selling that gold. But what's been happening behind the scenes is this massive geopolitical restructuring of the world's financial systems and a massive move away from the US dollar. There's so much war, political tensions, that people don't want to own US dollars. They don't want to be subject to US sanctions if they fall afoul of US foreign policy. And so they're trying to de-dollarize, and they're buying gold. Countries are buying gold. Wealthy citizens in those countries that are buying gold are buying gold. And so you've been seeing this net liquidation out of US ownership of gold into ownership of gold in China and Russia and India and Iran and all of the surrounding countries and Europe. And so, we get all the data of who's buying and what's buying, and it's just a very, very clear. We've literally been selling in North America our golds to the rest of the world, and they've been buying it en masse. and they're all running large. Those governments are all running large deficits, and that inflation is a thing, and it's going to be continue a thing in the future. And so the citizens of those countries are worried about their currency devaluation. So they're increasing their gold exposure, while the central banks are increasing their gold exposure, and gold has just moved and stepped higher and higher and higher. And I think this move above $2,300 per ounce isn't just a spike and then we're going to have a crash and it'll go back to normal. This is a spike, and yes, it's going to be volatile as geopolitics play out, but it has been a reset. There's one way to say it is, China has got a stranglehold on gold and gold prices, and they're not letting go, and they're not going to let go, and the rest of the world's not going to let go, and gold prices are high, and they're going to keep going higher over time.
That's interesting because China is the world's largest producer of gold. They import a ton. They don't export any. It's maybe kind of a mystery. I'd love to know your thoughts. Is it a mystery how much gold they may own in China?
It's not that much of a mystery. I mean, nobody actually believes the numbers that they publicly report. We all know that they own a little bit more than they say that they do. Okay. But there's an enormous amount of gold that is being bought in China. But don't forget India. India, even though they're not at the same level of China, Russia, Iran, and sort of the axis of authoritarianism, the falling foul, you've got India over here who traditionally gold is their thing. And what's happening behind the scenes right now, and the World Gold Council is actually involved in, is working with the government in India and their legal frameworks and infrastructure of how gold is seen, treated legally, used in the banking system, the infrastructure of citizens to be able to buy it and sell it, and all of that legislation has been making enormous amounts of progress. So we're actually starting to see the fundamental and foundational legal infrastructure in the rest of the world to allow gold to be owned by citizens in a whole bunch of different ways, and bank accounts is being set up now. So, gold is high even without those legal frameworks being put in place.
Right.
But as those legal frameworks are being put in place, gold is just going to be owned more and more and more and more by people. I mean, I think gold's going over $3,000 an ounce in the not too distant future, and it's going to stay there.
Now, you mentioned the term de-dollarization, which has been thrown around a lot in the last 12 months. And when you look at the central bank gold buying trend, what do you make of that? Is that a lifeboat strategy? Because you look at the sanctions against Russia, a handful of the nations that you mentioned, Iran, for example, they're obviously looking to protect themselves against US dollar sanctions. So is it a lifeboat, like an insurance policy, or is there something bigger? Is there something bigger in terms of global trade and the gold backs?
No, it's way, way bigger. And these are forces that are going to play out over the next generation.
Yeah. Okay.
It's, China and Russia and Iran and even India to a lesser extent, if they could get off the US dollar today, they would do it today. The problem is that the globalization and global supply chains and trade are so complicatedly interlinked that you can't just do it today. You've got to step change your processes of how money and swap lines work intergovernments. You've got to change how trade works. You've got to change how the normalization of, in contracts, for example, sometimes you'll reference LIBOR as an interest rates, but sometimes you'll reference US dollar interest rates. That's embedded in contracts of all of these companies, around the world. And so you've got to step by step, and the governments around the world are trying to do this, is de-dollarize in their legal frameworks so that they're not actually having to trade in US dollars. And it's sort of every year the US dollar gets a little bit less important around the world, and the year after a little less and a little less and a little less. And so now more than half of the world's trade is no longer in US dollars. I mean, US dollar used to be what you did global trade in. Now, more than 50% of the world's trade is no longer done in US dollars. Eventually that number is just going to keep shrinking and shrinking and shrinking and shrinking and shrinking.
Because you're right, on an annual basis, it looks like, it's a little bit on the margin.
Exactly. Yeah, it is. It's hard to see in the data, but if you look over these long time horizons, they're systematically trying to get the US dollar out of global trade, because right now the US has built the world's financial system. They've built SWIFT so that they're not just in a physical war with missiles, they're in an economic war where if they can control your economy by putting sanctions on you when you fall foul of them, they can influence your foreign policy. And so the rest of the world is trying to retreat from using the US dollar so that the US cannot influence them from a foreign policy perspective, and that is going to continue for better or for worse. I mean, I'm a fan of the U.S. and generally speaking, a fan of U.S. Foreign policy, but for better or for worse, the governments around the world that don't like being bullied, and so they're moving out of the U.S. dollar and they're moving into gold.
That's why I find it so important to try to spot those trajectories, because these little events that occur, sometimes they seem like insignificant on the margin occurrences, but when you can identify the trajectory, the year over year trend, and that's when things get serious. And another area where things are getting serious is in global conflicts right now. So a couple of things that you mentioned made me want to ask you, what's your take on the big picture American cycle of empire, right? We know all empires have a beginning, a middle, and an end. They do. And in the last just 600 years, we're on our fifth, right? We've had the Portuguese, the Spanish, the Dutch, the British. We're now the American empire. So it gives you a bit of a sense of the expeditious nature with which power rotates around the globe. I would imagine the citizens of each one of those empires never saw the end coming. They thought this is forever now, right? Obviously not the case. So I want to ask your take on that question, and if it's valuable, relate that to the global conflicts we are seeing arise right now in Europe, in the Middle East, in the South Pacific. It's looking quite tense. I want to talk about Africa in a minute because there's a lot going on there that I think is relevant. But what's your take, Nolan?
Yeah, no, it's certainly a big topic, but the role and dominance of the U.S., I think I don't think the empire is crumbling. I think the empire is slowly fading into a version of the world where there are going to be equal and opposite balancing powers. You have to remember that the U.S. has one distinct advantage, which is it only has two neighbors. It's got oceans and it's got Canada, which is safe, and then Mexico, it's dealing with that thing. But it has economic stability, and it doesn't have to worry about wars on all of its borders. And that is going to be one of its true fundamental strengths as it continues to try to exert its power around the world. I mean, Russia is a significant influence in the world, but they're only 150 million people, but they own a disproportionate amount of the world's resources, and they know it, and they know the world needs them, and they know they can profit off of the world. And then you've got China, which has this massive population, this massive economic engine. It's not as strong as the US, and I don't think it's ever going to truly surpass the US. The GDP in China per person is never going to surpass the US. I mean, it might surpass it in total, but it's never going to on an absolute basis. But what these countries know is if they stick together, right? If China has specific objectives militarily, and it wants to take over Taiwan, and it wants to take over the South China Sea, and if Russia has its specific objectives in rebuilding the Soviet empire, and if Iran has its specific objectives of, it wants to get rid of Israel and the Israelites people. They know that they can accomplish all of those objectives if all they do is stick together. They really are a combined risen power, and I call it the axis of authoritarianism. And so you're seeing the rise of those powers so much that in aggregate, it's starting to look like they are stronger than the U.S. I mean, for example, right now, a lot of people are wondering why the U.S. isn't kind of going over the top in some of these wars and helping Ukraine win. Well, the reason is because China, Russia, and Iran combined now have 3 times the missile manufacturing capacity in their countries than the Western world does combined. So yes, we may have more missiles today, but if we get into an actual all-out war right now, once all the missiles are depleted, they're making missiles faster than we're making missiles. And oh, by the way, things like in Canada, we've got one munitions making facility in Canada, and it can't run at capacity because it can't get the antimony because the Chinese have locked down the rare earths and antimony metals, and so we literally can't get the metals required to build the munitions if there's a war. And so I think the U.S. has just woken up to this fact that it's like, oh shoot, they've been thinking for 15 years together as a group. And they've outthought us, and they've outplanned us, and they've outbuilt manufacturing capacity, and we're behind and we're in trouble. And so they're going to slow play this as they build out their war machine.
And so so the counterpoint to that might be, yes, but the ideological differences between Iran, Russia, and China are too great for that bond to be as strong as it would need to be. And if you look at during the final years of the British Empire, right, World War II, you see 2 nations with massive ideological differences fighting side by side, the Americans and the Russians, right, on the front lines, fighting shoulder to shoulder. As soon as that war was over, those ideological differences bubbled to the surface, and you end up in the Cold War. And so the devil's advocate point to, and that's a shocking stat, by the way. I had no idea that between China, Russia, and Iran, they have 3x the missile competency than the West combined. That's wild. I didn't know that.
Yeah.
Okay. So what would you say to somebody who brings that up? And they're like, yes, but the ideological differences are too great for this alliance to really have longevity and strength.
I don't know. I think the alliance can have longevity and strength.
Because they've got the common enemy.
Yeah.
Is that why?
I mean, like, so you look at Ukraine for an example. One of the if you listen to CNN and you listen to some of the senators talking, like even on the Democratic side, who goes, "We want to support the Ukraine." There's becoming an increasing voice that is saying, "We want to support the Ukraine," except the problem is that the rate that we need to ship missiles to them, it's depleting our missiles that were being spread so thin that if China were to take over Taiwan, we couldn't stop them. You know, the whole plan right now is spread the U.S. so thin that they're ineffective everywhere, and the plan's working.
The plan's working. Spread the U.S. so thin that they're ineffective everywhere.
Yeah.
Now, another area that I'd love to talk about with you is the continent of Africa. I think there's been 9 military coups in the last 3 years, and another half dozen failed attempts. Interestingly, that the now infamous Wagner Group has been rebranded Africa Corps, and they're traveling around the continent offering regime change protection. Sounds like an insurance policy against a coup. It kind of is, if I understand it correctly. You were just in Sierra Leone on the front lines of a military coup personally. So what's your take on what I'm beginning to call the battle for Africa?
Yeah, I mean, there's definitely a battle for Africa, and it's kind of, two fronts. One I would call is sort of a non-religious authoritarianism, just people trying to take over countries, and as one does, when there's not a lot of checks and balances. And then the other is sort of an Islamic angle that is happening to it in some countries like Burkina Faso and Mali and countries like that, and eventually maybe to a certain extent Sierra Leone. But I started charity a number of years ago that we still operate a school with 700 kids in West Africa in a country called Sierra Leone, and so we've one of the best performing schools in all of West Africa. We fund it. It's a bunch of me and my mining friends who kind of fund it, and it's a wonderful school. And I was down there just as you said a few months ago, and my plane landed, checked into my hotel, and as I woke up, realized that I was right in the epicenter. So in the capital city of Freetown. In the capital city, they have sort of the president's headquarters where the president lives. They also have the national prison, and then they have the national armory where they keep all the weapons for the military. And a subsection of the military decided to have a coup and try to take over the presidency and lock down or kill the president. And so what they did is they went and they attacked the national prison with their goal to release 2,000 prisoners. Their idea was, we're going to then attack the armory. We'll get all the guns out. We'll get all the prisoners out. We'll match up the prisoners with the guns, and we'll take over the country. And so they attacked the prison. They successfully released all 2,000 prisoners in the national prison. They attacked the armory, and there was this sort of bloody battle that played out in the streets, military on military.
And you're on the ground in Freetown.
Yeah, I'm in Freetown. I'm 8 blocks away from this happening. People are ducking
away.
And we're hiding in our hotels. It's really odd to be in a hotel where there are no employees in the hotel because they're not allowed to come to work.
Yeah.
Because there's a coup going on and everyone's getting shot.
Oh man.
And so this coup played out, and the main section of the military won the coup, and the president was safe. But it was a scary thing to be caught in. And I know a guy from Vancouver who one of his friends got shot, and it was a real thing. A lot of people got killed.
Yeah, I mean, you wonder what the alternative outcome could have been had the coup been successful. Where does that put somebody like you in that scenario? I guess it's just an uncertainty.
Yeah, I mean, I try not to get too involved, supporting or not supporting any one individual political regime, but I think the reason the coup happened in that particular case is because the president of the country, who is the former general of the military, was accused of stealing the election, and by most accounts, it appears that's what he did. And he tear gassed the political opposition's headquarters leading up to the election. He sent in the military to kill a bunch of the supporters leading up to the election, and there were a bunch of voting irregularities, and so people tried to stand up against him, and unfortunately they lost.
Okay, so you were there because you founded an organization called Nations Cry, which built one of the best schools in Western Africa. You currently have 700 students. That's what you were doing in Sierra Leone, which kind of gets back to your roots, I think, when you became a businessman, essentially, because your initial intention with your life was to focus on humanitarian aid.
Yeah.
Is this correct? And I just want to share a quote with you that you shared with me that may have inspired your path. I don't know, but you said when you were deciding earlier in your life which direction you wanted to go, humanitarian versus business, and your dad said to you, Nolan, the world is full of well-meaning people who don't understand what's going on. And I think that is such a complete quote, and it's as relevant today as it would have been back then. But did I nail that? Is that correct? And you decided to pursue business so I could be more effective in the humanitarian direction, correct?
Yeah, I originally went to university and studying sciences. I'm a science nerd through and through, love sciences. And then decided to go into business, got into business school, and then decided, you know what? This world needs fixing and it needs people who care about it. And I went to drop out of business school to go be a humanitarian. And that's when my dad gave me that speech, and the longer version of that speech is he said, the world is full of people who don't know how to build organizations, they don't know how to set visions, they don't know how the economy works, they don't know taxation systems, they don't know how to build and do the things required to make the change, and they don't even understand what change needs to be made because they don't understand the second or third and fourth order repercussions of the things that they're trying to do. They don't understand that if they actually got what they were trying to do, it would then cause this and that to happen, which makes everything even worse.
Yeah.
Socialism, for an example.
Yeah.
And so go get a business degree, get an understanding fundamentally of how the world works, and then you can understand how to fix it. And that sort of set me on my path. And as soon as I graduated from university with a business degree, and I became a CPA and a CFA. And while I was doing that, while I was articling, I set up Nations Cry, the charity. And I remember I went to church one day, and after church, my wife and I were sitting down, and I said, I really want to start this charity. I just really feel called that I need to do this now. And we had no money. I was an articling student. She had just graduated university. We were married, in our early 20s with nothing. And she said, awesome, I love your enthusiasm, Nolan, but where are you going to get the money? Because we were barely making rent. And I said, so I'm studying for my CPA exams, I heard that there's a $2,000 prize if you finish first in Western Canada out of 1,000 people. And if I can finish first out of 1,000 people in Western Canada and I get the 2,000, can I use that money instead of, paying rent? Can I use that money to pay for legal fees to start up a charity? And she's like, okay, fine. And so I studied hundreds of hours, and I finished first out of 1,000 people in Western Canada. I got $2,000. I used it to set up a charity.
That's an amazing story. And fast forward a couple of years, you become the youngest CFO at any New York Stock Exchange listed company at 26 years old, Wheaton Precious Metals.
Yeah, so my career kind of took off, and it's kind of in the right place at the right time. There's a guy named Ian Telfer who, he founded Goldcorp and the University of Ottawa. Their business school is called the Telfer School of Management, named after Ian Telfer. And he was starting up what became Goldcorp, and hired me I think I was 23 or 24 years old, to come be part of that team and do corporate development and do financial analysis and stuff like that. Within a year, they're like, we're creating this thing called Silver Wheaton. We've invented streaming as a business model. Nolan, will you go be the CFO of that company? And so, at the age of 26, I became the youngest CFO of a multi-billion-dollar New York Stock Exchange listed company. We grew Silver Wheaton to be about a $5 billion market cap. Silver Wheaton is now called Wheaton Precious Metals. It's one of the largest precious metal company in the entire world. We grew that into a multi-billion dollar company, and then I was like, hey, I want to go do this myself, and I started up Sandstorm.
Yeah, and this brings us to where we began the conversation during the depths of the 2008 financial crisis. Yourself and David Aram started Sandstorm Gold.
Yeah.
Did your first royalty agreement in 2009. I think you did two, one with First Majestic, correct? And,
yeah, it was originally Silvercrest back then, which they ended up getting bought by First Majestic, yeah.
Yes, okay, and another with a mine that's now owned by Equinox, that's correct?
Yep.
Yes,
yeah,
okay.
The Arizona mine, yeah.
Okay, and then you've been busy, and now today we're at over 100 royalty agreements, 40 cash flowing.
We've got 240 streams and royalties around the world. 40 of them are cash flowing right now.
240.
Yeah, at
Okay.
today's gold prices, so we're getting gold. You know, in a royalty, they just make you a cash payment equal to your percentage of the revenue that you're entitled from the gold from that mine. But a lot of our revenue comes from streams, which is where the mining company is mining a mine. It might even be a copper mine, but we get to buy their gold that comes from the copper mine, and we buy it at, say, 20% of the spot price.
Yes.
And so we're getting gold sent to us from mines all around the world. At today's gold prices, we're probably, over $150 million US a year of free cash flow. We've bought a whole bunch of things. We made $1 billion worth of acquisitions a couple of years ago that we've been digesting. And
Was this 2022?
Yeah, 2022.
That was a busy year for you guys.
It was a busy year, yeah. It was
Yeah.
over $1 billion worth of acquisitions. We took on $600 million worth of debt to do it because I really wanted to avoid dilution as much as possible. So we took on all this debt to do it. Interesting timing because we took it on variable rates and then interest rates went through the roof. It was a little bit painful. But we're now cash flowing so much that debt has come down to it'll be below $400 million by the time this thing airs.
Sure.
And dropping rapidly. But what we bought with those acquisitions was a bunch of assets, a bunch of streams on mines that are being built now. So, for example, we bought a stream on Equinox's Greenstone mine, one of the best mines then it'll be one of the best mines in Canada. We're going to make $20 million a year free cash flow from that stream. Ivanhoe is building their Platte Reef mine in South Africa. We bought a big stream on that. Barrick is building their Robertson mine in Nevada. We've bought a royalty on that. We've got a mine being built in Turkey called Hod Maden. We've got a huge stream on that. And then Glencore's building a project called Mara, and we've got a stream on that. Once those are built, we'll be cash flowing at today's gold prices well over $250 million every single year. So we've created this huge cash flow machine of
That's
precious
what
metals.
fires me up about your business model is all the growth that's already built into it. I mean, 2023, you guys set a revenue record, close to $200 billion, like 191.5, something like this, right?
Yeah.
And all this capital you've just allocated is in future cash flow. Now, as best you can, could you walk my audience through how these royalty agreements work? And I know you can't really because they're all different, especially in your case. And the three of you, yourself, David, and your CFO, Irfam, seem to be this like perfect trio of like business, geology, and negotiation expertise. And when I look at all the deals you guys have set up, because they're all different, right? Some may be like a flat rate per ounce, some may be a percent of spot, some may be a percent of spot until X dollars are paid back. And if it's a polymetallic, you'll have different agreements for every metal. But so as simply as you can, Nolan, if that's possible, walk my audience through the process of setting up these agreements and what you put in place.
Yeah, I think one of the beauties of the model is what you're really trying to do is you're trying to identify someone who needs capital at the right time, and they're willing to sell a portion of forever to you today. And so we've got this team of geologists and engineers, and their job is to figure out what mines that, maybe the mine life is 10 years today, but we think it's actually going to run for 50 years or 70 years.
Because they'll continue to develop.
Exactly. And so what we're trying, and we think the gold price is over $3,000 an ounce, but they're willing to sell it to us, assuming gold's $1,800 an ounce.
Because they need the cash
Yeah.
today.
And so what we're trying to do is buy something that will get 50 years worth of gold coming to us at $3,000 an ounce, but paying for it as if it's 10 years of gold at $1,800 an ounce. So you pay this small amount of money today, and you tie down a piece of forever at that mine, and then you just get cash flow sent to you for decades. I mean, the first deals that you mentioned that we did 13 years ago, they were 7-year mine lives. Well, we've made all of our money back times 3, and they're still giving us gold every month. They're still producing. They're still giving us gold. The Arizona, that first mine, it had a 7-year mine life when we did the deal 13 years ago. We've doubled or tripled our money by now. And the mine life is probably, with the underground mine that they've now discovered, probably another 20 or 30 years. So it's just, you make enormous amounts of money over very long time horizons if you get this right. And so we've built this portfolio where we're getting gold from mines all around the world. We've diversified ourselves from a political risk perspective. So we're in, no one country is more than 14% of our NAV. Okay. We're talking about this political risk, and we've purposely avoided countries like Russia and China, and we don't have any streams or royalties in countries like that. And so we're literally just getting gold and we've owned gold in the ground, and we're getting gold every month from all around the world. And royalties, they're a bit different. Royalties, we're just getting a check. So a royalty might be a 2% NSR on a mine, says we get 2% of the revenue from that mine. And so you figure out every quarter how much revenue did you get, multiply that by 2%, and Sandstorm gets a check.
Right. And just for clarity's sake, a stream is different in that you actually take possession of the
Yeah,
metal.
they give us the actual metal. So if we buy a stream, what it's saying is you have to actually mine that ounce of gold, and you actually have to give us that ounce of gold.
And you do both, by the way. Sandstorm does both.
We're about 50% of our revenue comes, depending on the quarter and the year, about 50% of our revenue comes from royalties and 50% comes from streams. They're effectively very similar things. I mean, from an economics perspective, but mechanically they're a little bit different, and from a tax perspective they're a little bit different.
So you've been very busy over the last 13 years, specifically the last decade, when most people were not excited about the metals sector, right? I have to ask now that gold is hitting all-time highs, slowly becoming more in favor. I think the equities will get there too. What do you do? Because you were brave when everybody was scared.
Yeah.
Now people are going to start feeling brave. Do you sit back and then just harvest because you built this portfolio of 240 agreements in the pipeline already? What do you do at this point?
Yeah, so the way I think about it is although I still think we're in a structural upshift in gold, so this feels like a bull market, but I think it's going to keep getting better.
Okay.
So although we still do want to be active in this market for large transactions.
Okay.
But the way I look at it right now for Sandstorm is we're making tons of money today. We've already bought the next several streams that are being built and coming online, so our cash flow is going through the roof. Like I said, over $250 million a year. It's what's after that peak is what I'm focused on right now from a growth perspective. And so I'm a big believer in the green energy transition. I mean, the world needs to get off fossil fuels. It's going to be almost impossible for us to do this green energy transition thing in time, because one of the main bottlenecks for it is copper. There just literally is not enough copper. You need copper for electrification, for wind turbines, for electric vehicles, for solar panels, for all electrification. You need copper, and there's not enough of it. And so it just so happens that the world's best copper mines usually come with gold. And so what I want is to set ourselves up in the perfect situation to be the entity that is financing and buying that gold in the world's next generation of copper mines that are going to have to be built for the green energy transition. There's going to have to be trillions of dollars allocated to developing copper mines. And I want to be one of the financial providers that is doing that by locking down the gold in all of those mines. And so it's kind of a creative way to run a business, but at Sandstorm, what we've actually done, we just moved into new offices in Vancouver, and we took more office space than we needed. We took in a couple of extra floors that Sandstorm doesn't need, and what we did is we built literally a copper staircase that runs through all the floors, and then we subleased all of that out, so it cost Sandstorm shareholders nothing, so other companies are paying for it. We subleased all that space out to all of the copper gold explorationists in Vancouver. So there's many companies that are subleasing space from Sandstorm that literally have to walk up Sandstorm's copper staircase, and we share the same boardrooms, so it's like a WeWork type space. We share the same boardrooms, we share the same meeting rooms. I know every single guy who's drilling. I know if they're drilling in Ethiopia, I know if they're drilling in the Kingdom of Saudi Arabia, I know if they're drilling in Sudan, I know if they're drilling in BC, I know when the drill programs are going, I know if they're running out of money, and I know when to say, hey, corporate development guy at Sandstorm, go talk to that CEO and see if he needs $1 million for his next drill campaign, because I think he's onto something. And we want to tie down the royalty now for very tiny dollars for when they find that copper mine, and we want to build in a right of first refusal to be the stream provider for when the mine gets built. And so, Sandstorm, we're in this place where we're making tons of money now. We've got all of this growth that we already own, and we're planting the seeds intelligently all over the place to be part of the world's next generation of mines that will take us to the next level.
Fascinating. Okay. So a couple questions that have spun out of that in my brain right now. So back to the structural uptrend in the gold sector. I'd love you to add some clarity to that for me, if you may. I believe we're in a long-term, I think we might be in a long-term gold bull market. And I also believe that nothing goes up in a straight line. And so along this trend, we're going to have massive volatility and corrections.
Absolutely.
And during those corrections, people will say, oh, it's all over, right?
Yeah.
The other shoe finally dropped, right?
Absolutely.
So walk me through time horizon. That's the question I'm getting at here. When you say structural uptrend in the gold sector, what does that mean in terms of time horizon?
Yeah, I think we're in a 20-year structural uptrend where the entire world is moving away from the US dollar and into gold in what will continue to be a sort of warring phase of Earth's history. Whether we're in World War III or not now, but it's going to be 20 years of tense situations and war or precipice of war for a constant long period of time. And gold, people are going to want gold. Gold is also going to be infused into the world's monetary systems in deeper and deeper ways. And I could talk maybe a little bit about it, but there's an initiative of the World Gold Council called Gold 247, which I'm a part of, and I'm on the subcommittee overseeing that. And I see the use case for gold just going up and up and up. So I see this sort of structural upshift over the next generation. I think it's the perfect place to be for us. It's one of the reasons why at Sandstorm, when we're looking at making acquisitions, I do not care. If you've got a mine that's going to shut, 5 years of mine life and it's going to shut down, I'm uninterested in doing a deal with you. Like, I believe that the structural change is for such a long period of time. I really want that 40-year mine life because I want to be making the money off of that future. So you're right. The gold price is going to bounce around, and there's going to be a lot of volatility because, for example, tomorrow there could be a peace deal and a ceasefire between Hamas and Israel, and everything could calm down, and people could go, phew, we don't need gold, and it could drop to $2,000 an ounce next week. But these big structural things that I'm talking about aren't going away, and those tensions between Iran and the Islamic community and Israel aren't going away. They've been there for 2,000 years, and they're going to keep getting worse and worse and worse and worse, and they're going to manifest in different ways. So, we may have this phew, everything's okay moment, and not realizing it's that gold's going to keep going higher over the longer term.
Okay, copper. I want to talk to you about copper. So we consume about 26 million tons per year. Forecasts are all over the place, but consensus might be that we're going to add about 10 million tons to that consumption by 2035.
Yep.
Big question is, where's it going to come from, right? And I'm looking at the activity from the majors right now, and from my perspective, they seem more interested in buying existing production than investing in new production, which might solve or might provide a solution for them, but doesn't solve the copper problem. Like BHP's attempts here at Anglo, for example, right? Classic. Obviously it's more expensive, it's harder, it takes more time to produce, to find and develop new copper.
Well, that's the reason. I think that the world's largest copper companies see that there is a shortage coming, and it's going to be sooner rather than later. The price is going to spike massively in copper. And if you are spending dollars today on a drill program to find the next copper mine, by the time that you find it and get it into production, depending on what country it is, that's a 15-year period now.
Yeah.
And so you're going to have 15 years of missing out on this copper bull run if your strategy is go find it and then build it. And so what they're trying to do is they're all trying to say, how do I get copper into my production profile so that I'm producing while the spike happens. So they're more focused on spending their dollars and their profits buying existing copper mines than they are trying to find. So there's this sort of dearth of the next generation of copper mines. We don't know where they're coming from. We will find them, but it's almost too late. Like, people who talk about this green energy transition and getting carbon neutral by 2050, it isn't going to happen because we don't have the copper and we're not spending enough money to find it right now. Yeah. And so it's a problem. It's a real problem.
Yeah, you cannot decarbonize without copper.
Yep.
You cannot do that. So do you think the industry will need to evolve a little bit? Because I look at that and I'm like, so something's got to happen with that 15-year time horizon, right? We have to find a way to shorten that, either through more effective regulation or I'm not sure what. Maybe smaller mines become more palatable. What's your take, Nolan? Or do you think that's just what it is, and it comes back to what Rick Rule has been saying about uranium for the last 10 years, either the price goes up or the lights go out, and so the price is going up, right?
Yep.
And is that the same case with copper?
Yeah, the price is going to have to go up to a point where enough money is starting to be thrown that it filters its way down into the exploration companies. But one of the problems you have to remember is we've got a structural problem in our capital markets right now, which is the exploration companies, which are junior companies by nature usually. They're the ones that used to find the mines, and then once they found them, the bigger companies came in and bought them. The bigger companies don't have this attitude of exploration. They've still leaving it up to the junior companies. But the problem is the junior companies can't raise the money anymore, because there used to be all of these active fund managers. You used to be able to fly to Toronto and have 3 days of meetings, and at the end of the 3 days, raise $20 million for your drill program. But the vast majority of those funds that would have written a check for you, they don't exist anymore, because the money has been pulled out of those funds and it's been put into ETFs and passive funds that can only invest in companies if they're on an ETF indice, and they don't ever write checks into financings, right? So you're either on the list or you're off the list, and if you're on the list, you get invested in, and you're eligible for those dollars. They're no longer sitting in the hands of the person who can decide to invest in you. And so these junior companies, they can't raise money because there's no one to raise it from. And so there's this structural problem we have in our capital markets that is preventing sort of the next generation of mines to be found. So it's one of the reasons that Sandstorm has been trying to create or cultivate this atmosphere of exploration companies saying, if you're onto something, we have dollars and we can help push it forward. And it's much more needed now than it's ever been, and it's much more attractive to those companies than it has ever been.
Yeah, it's a tricky one, isn't it? Because if you're onto something, we have dollars. That's what Sandstorm's saying. And we know like that 80% of junior mining companies aren't onto something.
Totally.
And probably will never be,
Totally.
right? Which kind of reframes that question, like, is there a shortage of capital, or is there too many companies spreading that capital too thin? And these companies have no business being in exploration as they claim.
Certainly, there's not enough capital is the main problem.
Okay.
It is being exacerbated by what you just mentioned,
By
which
too
is
many-
there's the too little capital. Some of it's being stolen by people who have no business trying to explore.
Right. Good marketing campaigns and nothing else. Yeah. And I'm just like, so how do you get around that, right? And when I think, are there too many companies in the marketplace, the accountability kind of comes back to investors. It's like, well, they're venture funded, so why are their lights on? Well, investors keep writing checks into companies that don't deserve it, so whose fault is it, right? And it's like, well, I don't know. It's a tricky one, though.
Yeah.
So do you see a solution? Like, is there are there green shoots to this issue with high quality junior exploration companies struggling to raise the cash they need to bring legitimate deposits to the marketplace?
I think that
maybe that's what you're providing.
Yeah, I think you're starting to see, so we can see it in our office, like the companies that are subleasing space from us, where their capital is coming from. A lot of these companies are staying private a lot longer. They're not doing the normal junior company marketing thing where they're, putting out press releases, and they're going to the likes of private equity firms, they're going to the likes of Sandstorms, they're going to the like of super high net worth individuals who, they're going to sovereign wealth funds who want an exploration angle, and they're putting forward these exploration campaigns without really the public money,
right?
And getting it that they're the type of people who have true substance, know they're onto something, know the dollars are being spent well, and know they'll go public at a much later date once they've already found something. And
when they need more access. So that makes sense. If you can raise the money privately, why would you go public?
Yeah.
You can just focus
if you look at it, like Ivanhoe Electric is a good example of this. So, right, Robert Freeland is, one of the world's best exploration guys. I mean, he's found Oyu Tolgoi in Mongolia, and he started the Ivanhoe and their Platreef stuff, and now this Ivanhoe Electric thing. Ivanhoe Electric stayed private and was privately funded until they had mines and found mines and had tied down enormous amounts of tracts of land and were onto certain things, but long before they went. They waited till they had substance to go public. The old days of someone like going public with a $2 million market cap company and raising $3 million and finding something, I think that's dead. I think it's dead and dying.
Okay, I want to close the loop on Sandstorm here. I really appreciated your take when you said, here's our thesis on the gold sector. I think we're in this structural uptrend. It's going to take us this far, but what I'm working on as the CEO is what's next, and that's why you're looking at copper so closely. For any prospective shareholders, you're not a near-term news flow guy, so I won't ask you, what news can we expect, like I might with an exploration company? What news can we expect in 4 to 6 months, right? What can prospective shareholders expect from Sandstorm, right? I think, talk about stewardship of capital, right? How that capital is put to use,
Yep.
right? An owner of Sandstorm gets what?
Yeah, so we're in a sweet spot right now where our debt has been coming down rapidly. Our debt is down to a number where we're really out there looking for our next leg of growth.
Okay.
So we've got a revolving credit facility of $625 million. It's like a credit card. We've paid it down to below $400 million and dropping rapidly. So we've got over basically $250 million of room on that. At today's high gold prices, we're very comfortable drawing. So we are in a position where our leverage is coming down. We're out looking for our next leg of growth. But I think what's actually particularly exciting is we fundamentally believe that the portfolio that we've built is so valuable and is going to make so much money that our shares are worth so much more than they're trading at today, that we've actually decided rather than lots of growth right now, and because we've already got growth built in, we'd actually rather spend some of those dollars buying back our own shares. So we just CDI filed that we've just started buying back our own shares again, and our plan is to continue to do that. So I think what Sandstorm shareholders now can expect is in this market where money is trying to find a home investing in gold, and our share price has been moving up because of that, we're going to be coming in with our own cash and buying back our own shares because we think our shares are worth so much more. And I think that's going to accelerate the increase in the share price. So I think what Sandstorm shareholders can be excited for now is I'm very confident that our share price is going to be moving up rapidly over the next year. And then we'll turn our attention to the next leg of growth.
Okay, I love that. I love that. And so far, you've put the debt to very good use. I mean, 2022, you guys were crazy busy, and that resulted in record earnings in 2023. Right.
And there's going to be records going forward because we've got the Greenstone mine coming online, we've got the Platreef mine coming online, then Robertson, then Hod Maden, then Mara. Yeah. So we've got all of this growth that we already own that's going to be coming online. So it's a good future.
Yeah, your pipeline is jammed. Look, Nolan, this has been super fun. I'm really glad we can make the time to do this. Thanks for coming in and chatting with me today. I appreciate it.
Yeah, thank you. Appreciate it.